Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing? Hope you're having a good day here so far. This is just a quick show that we do. We call it the Closing Beat. It's a stock market update. We go over the good, the bad, and the ugly with the stock market, share all kinds of good geeky stats with you, give you an update on how things are going. And we're financial advisors here at Jazz Wealth, but unlike the other advisors that go out and buy you a mutual fund and then go play golf, or I don't know what they do, to be honest with you. We actually we build our own funds here. They're all right on our website. They're like our own little private mutual funds or exchange-traded funds. There's no expense ratios to them. And so because of that, we're in there, right? We're looking at all these funds. We are fund managers looking to see where we need to make adjustments to stay with our objective. By the way, all of that's listed on the website as well. And so because of that, we're staring at the markets all day. And I thought, hey, well, why don't we just update everybody on how the markets do every day and see if that works as some sort of sneaky marketing. Right? That's, to be honest with you, it's just marketing. You remember the name. I wear the same shirt every day. This pretty face has, a nice little show, and you remember us here at Jazz Wealth. All right, let's get started here today. By the way, we're playing a game. Do you want to play a game? If you like playing games, go to jazzwealth.com/guess the Dow. You can tell me where you think the Dow is going to close next week, and if you're the closest without going over, we'll send you a $100 gift card. No strings attached. We won't market to you. We won't do anything at all. You just simply place your guess. If you don't guess the closest, or if you are not the winner, we won't bug you. We'll just move on to another game. We'll try it again. So that's that. If you're one of our customers, of course, you have the option of crediting your account. It'll ask you that question when you go through the system there. Also, we have a class coming up Thursday. Every Thursday, I do a class for our clients. We go over something new, more detailed, and we call it Wine and Wealth. And so inside the video library that we have is all the previous classes, and now we actually go live inside of our own little custom financial Netflix-looking thing. So that'll be Thursday. We're going to cover some of the new updates to what we call Nest Egg, our financial planning software, and then maybe get into some geeky stuff there, I think, as well. Maybe talk about the stocks. And so if you're one of our customers and you have positions and you want to chat about them in great detail, bring them to the class. Let's see what we can do there. All right, enough about me. Let's talk about the markets today. The Dow was higher by 73. The S&P was flat again, right? So yesterday it was flat with a tiny loss. Today it was flat with a tiny gain. We've essentially spent 2 days doing nothing here with the S&P. And the NASDAQ lost another 3 points. Yesterday it was down as well. So the NASDAQ dragging just a little bit behind there. We've been saying this for the past couple days. A pullback this week would be okay, meaning if the markets actually fell a little bit this week, it would actually be okay and nobody would really care or be too heartbroken or anything, just as long as we didn't fall too much. I should point out that the Russell 2000, another day of a plus 1% gain, so very strong there in the Russell 2000. Why? Right? Anytime you see something that's a little bit different, you go, why? Well, another thing that looks different, we have money moving into stocks that have been beaten down, like in a big way, not just like me and you just bottom picking a stock, but huge money. I'm talking target date funds here, big mutual funds, big hedge funds, all saying, we want to buy the stuff that's on sale. Why? What's going on there? Well, the fancy way that they'll say it is that money's moving out of growth stocks and into value stocks. That's the only way they'll say it. So they'll say the growth to value trade, if you happen to read an article or anything that was done by some financial institution or financial media. Now, we've been trying to keep you ahead on this and show you money moving out of consumer staples, moving out of utilities, moving out of the REITs little by little and saying, remember we said yesterday, the first couple minutes of the video, that's okay. That's people taking profits and using those profits to buy discounts. If they're not accurate with their purchase price, then it's not that big of a deal because it wasn't their money to begin with. Well, that continued today, right? And rather than go into all this sort of, sometimes I get carried away. I understand it's, I like talking about the geeky stuff, but I thought of a really simple way to show you money moving out of the growth stocks and into what they call the value stocks, if you care to pay attention to it. So let's dive in. I'll show you real quick. All right, so on the chart, you've got the S&P 500 doing a whole lot of nothing. That's okay. Let's take the list of all of the S&P 500 stocks. And what we're going to do is we're going to sort them by the biggest losers on the day. So I'm going to literally start with the biggest losing S&P 500 stock for the day. What I want you to see is if you can notice a pattern here, right? So I'm going to start at the very, very top. The first one is called Market Access. It's a bond trading platform. It's a brokerage firm. And so I want you to look at the overall trend, very, 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 very much strong. And then look at the last few days, very, very weak. All right, so they've had a bad few days there. Next one, Chipotle. That one lost 6.15%. Look at the trend. Everything is very, very strong. And over the last few days, money is just leaving the stock. Normally, that would cause you to go, what on earth is going on with Chipotle? And you would look it up. Now I'm going to do this quickly. The next one, CME Group, look at the trend, look at the last few days. The NASDAQ, look at the trend, look at the last few days. SBAC, this is SBA Communications, look at the trend, look at the last few days. Synopsys, last few days, and of course the trend. Keep looking. I'm going to go a little bit faster here. So we got Ball Corp, we got Motorola, we got Starbucks there, very strong uptrend. MasterCard, very strong uptrend, last couple days down. CDNS, Cadence, very strong uptrend and actually started fading away a little earlier. You got MSCI starting to fade away. Mondelez, very strong fading away. McDonald's, very strong fading away. AMT, Waste Management, we could go on, right? Look at what's happening there. All the stocks that were in an uptrend are just pulling back a little bit here. So headed towards where? That's what we want to know. Where's the money going? Clearly money is moving somewhere. And if the elephants in the room are moving money somewhere else, where are they going? Let's sort the list by the top gainers for the day. So the first one, Nectar Therapeutics, that's your biggest gainer on the day with an 11% gain. Look at the trend now being the exact opposite. A great downtrend there, and all of a sudden, that's the biggest gainer on the day. Is there some kind of news? Next, State Street. Look at the trend. Downtrend, very positive day there. Macerich, Macerich, very strong downtrend. All of a sudden, over the last few days, looking strong. Mosaic, all of a sudden looking strong. Macy's, beaten down to death. We've talked about this so many times, making new 52-week lows. All of a sudden, it's one of the strong ones. Capri, that's another retailer we've been talking about. Very strong there. All of a sudden, you've got Eastman Chemical, very strong. See how we've got downtrends here? Even CenturyLink, by the way. You got really strong downtrends, and all of a sudden, these are the really strong ones, right? West Rock, Advanced Auto Parts, that one had a great run last year. All of a sudden, that's one of the strong ones. I'll try to scroll through to maybe some names that you know, but these are all 4% plus gainers in the midst of unbelievable weakness for the stock. Nordstrom, even they had a little comeback day over the last couple of days there, about 4%. And you get the point, right? You get what I'm trying to say there? So it's very clear by scrolling, and I can't even scroll any faster, or the screen can't keep up, but you get my point. Money moving out of the strong stuff, all clearly in uptrends, looking good, and moving into the stuff that was in a downtrend. That's just people trying to pick a little bit of a bottom there. I hope that helps you sort of see that. Now, if you go, I don't want to look through all those charts. Are you kidding me? I don't have all kinds of time. What am I supposed to do here? I want a way to pay attention to that a little bit faster than everybody else. Well, there's ETFs you can use to follow that. Money moving out of growth and momentum, moving into value. So just remember that's the actual words there. You can go over here, and if you want to use an ETF, it's MTOM, appropriately called, momentum. So this is just a quick ETF to look at, hey, this is the momentum stocks, the real strong stocks that have very, very strong and quick uptrends. We got, look, a very strong uptrend, last couple of days, moving out of there, no big deal. So that's comparing the momentum stocks, and I believe it's VLUE. Yeah, value, or VLUE. These are your value stocks. So it's the same thing. You could see, had a rough patch here. Basically, this ETF's performed pretty well, actually, considering. And over the last few days here, you've got this sharp little rally there. So it's just a fast way for you to see money moving out of momentum, moving into value. I hope that helps for you. That is your lesson of the day. Moving on. All right, here we go. Let me just pull up my other list here, get back to normal where I normally stand here. Now, it wasn't just retail, right? So you got a lot of energy, you got a lot of oil-based names. If we look at the XMEs, your metals and mining's very strong in that space there. You got OIH, this was the oil services we talked about yesterday. They did well today. You got XOP, about a 1% gain on the day. That also coming up off the bottom. Those are value areas. Energy was really weak. We've covered it so many times with stocks below the 50-day moving average in the energy sector. Retail, of course, I don't have to point that one out. Retail was one of the better performing areas today. The XRT is one way to take a look at that. And so you can very clearly start to, whether you want to go stock by stock or you want to use sector ETFs, you can just very quickly get in there and see, oh, okay, moving from momentum to value. So it's an easy way to see it. All right, other things to talk about today, bonds. Doing exactly what they're supposed to. TLT is one that we've been focused on here. It is supposed to be negative. We talked about it having only a 30% chance of being positive. And so we're clearly living that there. That's good. That's a warm welcome for a lot of you. You guys don't mind the higher rates. And if I could just, will this work? See, I should prepare for these things. You know what I mean? Let me see. Can you see? Well, hey, you can see that. Okay, don't be scared by this chart. What this is the S&P 500 on the top and the 10 to 2-year Treasury spread on the bottom. And so what you're seeing there is, of course, we've moved to an inverted area there. We've now gone back positive. But we did a class for our customers here to explain exactly what this means and how to tell exactly when you are going to have a recession, at least to give you the best statistical odds versus what everybody else focuses on TV. So we went over that, and I just wanted to show this chart real quick because now you have yields starting to move back into normal territory. Now this is over the last couple, you could see the gray areas of the last couple recessions in there. I'm going to zoom in just year to date because I want to show for our customers here. Look what happened. We had our class last week. We went inverted. We talked about that, what it all meant. Now what's happening? All of a sudden we're going back to normal. Our customers know exactly what that means, and I think that's so cool because no other advisor goes through to try to teach you that sort of thing. And so if you're keeping track of that, I just give you an update. I told our customers I'd do that. Bottom line is your bonds pulling back as they should statistically, which is also helpful if you like to use those as recession indicators there. Oh, can I go back? Can we just put it up? Yeah. Oh, I thought I broke it. Okay. So that's that one. Now, with the rates rising a little bit, you got regional banks, of course, still doing well. They've had a good stretch in there because rates higher help those regional banks. Also helps a few of the larger ones like Bank of America and things like that. But those look really good. Transports look good. You had Boeing today helping out that space. IYT is the ETF, and then BA is the stock, of course. And Boeing having a little bit of it's kind of a sloppy breakout there, getting things going there, even though doors fly off that plane yesterday, actually. It doesn't matter. The stock's moving a little bit higher. And that pretty much covers the overall sectors there. If we take a look, let me see. Do I have any other sectors I want to cover? I think that's pretty much it now that I get back into place there. I don't need to go over the retail stuff again. You know that, right? You've got PVH, you've got Tapestry, all looking good. All the bottom sort of dwellings type stocks getting a little bit of a bounce off of the lows there. We covered Capri and everything in our example to kind of show that. We can put it back on the chart. So Tapestry moving higher, and a lot of those names. Advanced Auto Parts, we covered that one there. Macy's and Capri and all that, so we'll move on there. Starbucks maybe got a little bit more of a hit today. The SEC sent them a letter. They do this. The SEC sends out letters and stuff inquiring about different things that you report to them. Same with us. We went through the same thing. But Starbucks is naturally a more financially complicated business than ours is. They had questions about how they recognize money. Right? How do they recognize payments to them, profits to them, earnings to them? How do they recognize that? One in particular that they were focused on was the $7 billion that Nestle paid for the rights to sell Starbucks products. It just so happened to coincide with how they adjust the accounting for gift cards to make it look like that $7 billion didn't really amount to anything. Kind of a cool story if you're interested in that one, but that's it for Starbucks. That might have hurt him a little bit more. Otherwise, yeah, that's basically the story here for today. Is just the momentum, the growth leaders really starting to crack a little bit there. In the banking sector, you got Wells Fargo. It was down a little bit, not really much today. UBS, another bank, actually downgraded the stock and said the bank lacks visibility on profitability improvement, also expects lower net interest income, which I think we all expect. If you look up this analyst here, he's got a $49 price target, which is essentially where the stock is right now, but he means over the next 12 months, that's the best that it's going to do. So it's not that he's got a sort of a short profit target. He just thinks that's the best it's going to do. You got this guy has a 56% accuracy, but he's new. He's only got about 45 calls, so he's trying to make his mark there in the space. He has a 0% gain yet because I believe he's that new. He hasn't been around long enough to make that happen. So I don't give the new guys grief. You know, they got to make their mark there. Let's see how he does. But anyways, I looked up the best analyst to see where he stands. He's got a $59 price target as of now for the rest of the year. He is 74% accurate with a 12% average gain there. So, got to go with the stats for now on that one. What else do we got? 62% of the stocks are above the in the S&P are above the 50-day moving average. We were at 60 yesterday, 56 on Friday. So you've got a slight improvement, just ever so slightly, things moving better and better there. It'd be interesting to see if that flatlines, because if the stocks that were really strong start to cool off, but the stocks that were weak start to pick back up, does that list start to increase, right? Because now we have new stocks trading above the 50-day. We'll see how that goes. You had 14 52-week highs today. but really it was just kind of a lot of the stocks that were flat and had recent pops higher there. So you got like Seagate and OneOak. There's just a couple names. The two new lows aren't really that interesting for you. It's ILMN and Regeneron that were lows from yesterday, and that's pretty much it for that. I do want to point out Dollar General making the stats come true there. It took 2 days instead of 5 days, but probably still ends up a little bit lower anyways. We gave you the stat last Friday to tell you that 69.1% of the time when Dollar General gets as extended as it was on Friday, it is usually down an average, it's usually down over the next 5 days, but an average of 2.36%, and today more than accounts for that. So that stat coming true, so I'll give you another one. I like following up with these things. I'm not telling you to buy the stock or anything. I like stats, man. Just like to see what happens. Let's talk about Adobe. So we talked about Adobe a couple weeks ago saying you got a lot of relative weakness here and that it looked like it was going to break down. The problem was risk to reward. It would have to be a really tight trade, and so a lot of people probably wouldn't be excited about that. Well, now that it has broken down and all that did play out, over the next 5 days, given this recent breakdown here, you have a 65.4% chance of at least a 1.66% gain in the next 5 days. Now, I think you get a little bit of a benefit there because of that risk to reward. So if you're interested in that, maybe go back and check out one of our previous classes, Closing Beats, to kind of show how we went through analyzing that, giving you a heads up. I will track that for the next 5 days, and we'll see if it can, in fact, bounce 1.66%. That would essentially erase all of what it lost today, plus a little bit more. Interesting. If you like Apple, Apple launched a whole bunch of stuff today. Actually, new iPhones, Apple Streaming TV starting at $4.99 a month. That'll start on November 1st. You might imagine that probably hurt stocks like Roku, hurt stocks like Netflix there in there today. The iPhone 11 announced and has 3 cameras. Does this remind you of the shavers? It was like, we have 2 blades, and then all of a sudden 3 blades, and then Mach 5, we have 5 blades. Is it like that? I mean, eventually, is it just going to be like bedazzled in cameras and it does like 3D shooting and stuff? I don't know. We'll see. So Apple in the news today. Typically, it sells off throughout the day on the announcement. It ended up a little bit higher on the day. WeWork, they're coming public. Like it or not, they're coming public. Fascinating accounting with how they do WeWork. And let's just say the CEO there, how he handles his properties. But are they the company's? Or the his, right? It's very cool. I'm not saying I agree or disagree with it, just I found that to be interesting. Uber laying off to 400 people. That was already known news. Today was, I think, the official day that happened. Stock was a little bit higher on the day, that they're trying to like scale back a little bit, cut costs and everything. And if you live in California and you happen to be in the NCAA and you're an athlete, you are now, I don't know when it starts, but you are now eligible to make a profit off of your endorsements. Do you think that's right or wrong? Where are my sports people at? Anyways, that's almost all I have to share with you. I tease. We have just a little bit more here. Tomorrow, we've got earnings from Aurora Cannabis and Tailored Brands. We have dividends coming from Public Storage, $2, by the way. We own that in our dividend or in our real estate fund. So $2 dividend headed our way. It's because it's a REIT. I mean, it's just what it is. QCOM, 62 cents coming out. And Ross Stores with 26 cents coming out. And that's it. Wendy's was lower today. If you happen to look at that one, we talked about that yesterday. Got 4 downgrades, actually. Average price target's $21. The best analyst has a price target of $24. And believe it or not, that's the same guy from SunTrust that we talked about the other day. 71% accuracy rating with a 17% average gain. Okay, now I have given you all I have to give you. Tomorrow, light news day. We got PPI coming out. That'll be a good market mover depending on what happens there, but we'll see. Yep. Come over here real quick. Make sure I'm dialed in. All right, if you have any questions, I'll give it a shot, see what I can do with the answers there. If I can't answer it, I'm sorry. GameStop having some issues this afternoon after the boost from the Big Short gentleman. I don't know if so many folks see the trouble coming. Yeah, well, you see it got a little buying there, right? So why would GameStop be rallying here in the short term? Does everybody think somehow GameStop is going to be a great company again, or that somebody wants to buy them or something? No, that's ETFs. At the end of the day, that's ETFs right there. So people going into, this is the problem that the Big Short guy has as well, the passive investing. So when people say, oh, I don't know what's going on, I see money going over here, I'll just buy an ETF. Well, the ETF has to buy those shares. So all the underlying stocks have this inflated value now. That would probably be what I expect on GME. I can't say for sure, but that'd be my guess. Makes sense to contribute to a Roth 401k after 30 years of putting into a traditional 401k and 5 years from retirement. Can't hurt, but don't make a major change there, because what happens is a lot of people don't think about this until Uncle Sam knocks on their door. If you're putting a lot of money, or say some big percentage into your 401k, and you get this bright idea that I'm going to take that and I'm going to go put it in my Roth 401k, well, okay, but your taxable income just went up. So you may owe more taxes than you think. So be strategic about that, I would say. But nothing wrong with that. Yeah, you got 5 years to go. You want to get some post-tax income in there. No problem with that. Also, you might consider conversions when you do retire, if it makes sense for you. Preliminary earnings for Aurora Cannabis. I wanted to say Aurorabis. They're expected to lose 5 cents. Revenue is $103 million. Just say no to taxes. I love it. Pay less than you have to. Thoughts on ELF? That's a makeup, beauty company or something like that. Rated number 1 on Zacks if it matters or not. It's the same thing. It's had a great run. Just people looking to take a little money out of that and move on there. Earnings are expected to be really great. Pretty much flat. They don't really make money, so that makes it tough if we get into a tough sort of environment there. But it's the same concept as some of those momentum stocks. Short squeeze on Fizz? No, I don't think so just yet. That's not a lot of activity there, right? What do you got? 11 million shares on the short side. 11 million? 11, 12 million shares on the short side. Yeah, you'd probably see a bigger move for a $45 stock like that. I think that's just your ETF buying in there. People that wanted to buy the value plays, and having a lot of those value ETFs include things like this national beverage is probably the reason why you see a little bounce there. Doesn't mean you can't see a short squeeze at some point if people decide they got to bail, maybe over 47 or so, but I don't think that constitutes there. You had almost no uptick in volume, which you would normally see. You need a class on the Roth versus the traditional for moderate to high income earners. Okay. Are you asking? I love it. So I would need a little more clarity on that one, but I like the idea. I do get that question a lot, believe it or not. As people make more and more, starting to make that decision. Should they be in the pre-tax, post-tax versus their income? I like it. Sorry if I missed any of your questions there. Any thoughts about rotation recently? Yep, we covered it. First thing in the video here today. You gotcha. I saw Carnival was higher today. Did Royal get a little bit higher as well? Yeah, breaking through a downtrend there. They're doing a lot of great things with the Bahamas there, and the hurricane really affected them to the tune of like 5 cents a share on earnings, and we've all priced that in. So not bad. Good, strong company breaking out of a downtrend there. Today you've got the technical traders looking at that, so no problem there. Thoughts on ATVI? I don't really know what to say on this one other than kind of where we left it was it broke out, got a little bit of momentum, and it did not fade away. We covered this day by day when it was having the potential to fade away. It didn't do it. That is the best lesson for a stock like this. If you're picking bottoms, you got a chance to see it be strong first. Maybe you had a chance to be a part of it or whatever, and it did not fade away. It held. So it broke out there, and instead of having people sell it, it held, and that led to this mark there. It looks good. That's cool. Is it time to get out of REITs? So I can't answer that question because I don't know, were you in it 3 days ago and now you're like, oh, shoot. Were you in it a week ago and you were hoping to hold it for a month? Were you in it since last year and you're going to hold it pretty much long term and you just want to try to time it a little bit? So those are tough questions to ask or to answer for me because I'm not sure what your game plan is there. ACN, why the big drop? Same thing. Growth stocks, money coming out of growth stocks, going into the value stocks as we highlighted earlier in the class. Just covered ATVI, nailed it. Include backdoor Roth conversions for high income earners as well as with the train. Yeah, we've done the backdoor Roths, yeah, both publicly and in our dojo there. And so it may be time to do those again. Yeah, it's probably, I can't think of the last time we did it, but we did do it there. Any plans to expand Jazz Wealth to Canada? I would love to. Unfortunately, I would need a partner. And at some point, I'm going to end up partnering with people that can offer our customers more. But I have yet to hear from anybody in Canada. I haven't sought anybody out, but we would have to actually partner with somebody. Otherwise, I'd have to go up there, get a place of business, and like have some sort of office or something. And I'm from Florida, man. I don't have a coat that big. I love it. NUE making a decent sized move for the stock today. Maybe start trending upwards. So I take it you own the stock or hope to own the stock there. So far, so good. Yeah, you can't complain. It's had a bigger move than most of the discounted stocks. That's one positive. You can look at it that way. So a lot of the stocks coming off their lows a little bit. It's like, okay, that's kind of nice. This one shot up off of its lows. So for some reason, there's more interest in this stock versus some of the other ones. I don't know that that continues going forward, but you like that if you're participating or looking to participate. What are the best stocks to put in your SEP account? I can't actually tell you individual stocks there. If you have a SEP account and you might want to look at your commissions there. Don't let that start eating up commissions. That doesn't mean go to an ETF or whatever, but see if you can get a better deal on the commissions. Also, it depends on your goal. What are you shooting for? Are you an aggressive investor with 30 years left to go? Are you retiring next month and you really probably should only have a few stocks, if that? Are you actively trading it? So these, you can understand why it'd be tough to answer those questions, because if you're actively trading it, that's a different response than if you're a buy and hold guy and you're just looking for the next great stock. So that's a tough one. Sorry, I can't be more specific. If you ask questions like that, try to ask me, I'm in this stock. I plan to hold it for another 2 weeks, provided it hits this target. Do you think it hits that target? I plan on investing in a growth stock in this category. Is there any better one for the next year, 2 years, things like that? Gives me a chance to help you out a little bit more without breaking any rules. That's all about the rules. I just don't want to... I don't want to get in trouble. All right, so that's going to be it for me. I'll wrap it up here today. Hope you had a great day. We've covered everything. We'll be back tomorrow, of course, to do that. And I thank you for watching. I really appreciate it. And, we'll be back to do this all again. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.